Crypto bull markets are incredible. Prices are pumping, portfolios are growing, and it feels like the entire world is finally waking up to the potential of Bitcoin and crypto. But if you've been here before, you know that bull markets are also where people make the biggest mistakes. When prices are soaring, rational thinking goes out the window and greed takes over. People start throwing money at random projects, convinced they found the next 100x. Investors stop thinking about risk and they assume prices will never crash again. And that's exactly how bull markets trap people at the top. Today, we're going to break down the psychology of bull markets, how emotions like FOMO and greed cause people to make terrible decisions, and why this happens in every cycle. And most importantly, how you can stay disciplined when everyone else is losing their minds. If you want to survive this bull run and actually keep your gains, then this video is for you. Let's start with the basics. Why do people act so irrationally in bull markets? Well, it comes down to two core emotions: greed and euphoria. When prices are rising, everyone feels like a genius. People see their portfolio growing and they assume they must be making the right decisions. Now, this creates confirmation bias, the idea that success is the result of skill rather than luck. Instead of sticking to a strategy, investors start chasing gains. They stop worrying about fundamentals and start buying projects just because they're going up. The logic becomes, if it's pumping, it must be good. In fact, this is exactly what happened in 2017. At the peak of that bull run, people were investing in anything with the word blockchain in the name. Companies that had nothing to do with crypto were adding blockchain to their branding and their marketing schemes, and their stock prices would skyrocket overnight. It was pure speculation. And in 2021, we saw the same pattern. Meme coins were exploding, NFTs were being sold for millions of dollars, and retail investors were convinced that this time was different. But it wasn't. The cycle repeated just like it always does. Now, the problem is that greed is blinding. When prices are rising, people ignore risk. They convince themselves that the market will always go up, and this leads to some of the worst mistakes in investing. In fact, one of the biggest mistakes people make in bull markets is FOMO buying. FOMO stands for fear of missing out. We've all seen it before. A coin is up maybe 200 or 300%, maybe even 500% in a short period of time. Now, instead of recognizing that it's overextended, people panic and buy in because they're afraid of missing out. The thought process typically is, if I don't buy now, I'll never get another chance. But in reality, most of these late stage pumps are exit liquidity. That means early investors, whales, insiders, and traders who got in early, they are using the hype to sell at the top while retail investors buy in at the worst possible time. And this happens in every bull run. By the time mainstream media is hyping up an asset, it's usually too late. If your Uber driver, your coworker, or your family member who never cared about crypto suddenly asks you about buying Bitcoin, that's a signal not to buy, but to be cautious. Another common mistake is overconfidence. During a bull market, people stop thinking rationally about risk. They assume that every trade will be a winner because, for a while, it feels like nothing can go wrong. And this leads to bad decisions like going all in on a single coin because they think it will outperform everything else, not taking profits because they believe the price will go higher, using leverage to chase even bigger gains, ignoring the risk of liquidation. Leverage is one of the most dangerous traps in a bull market. When prices are rising, people think leverage is a shortcut to wealth. They see a 10% move in Bitcoin and realize that with 10x leverage, they could have made 100%. So they start trading with borrowed money, not realizing that if the price drops just 10%, they'll get liquidated and lose everything. This is exactly what happened in 2021. The market was overheated, funding rates were through the roof, and traders were over leveraged. Then in May 2021, a single market correction wiped out billions of dollars in liquidations in just a few hours. People who thought they were playing it smart lost everything because they didn't respect the risk. So, how do you avoid falling into these psychological traps? Well, the first step is recognizing that markets move in cycles. No matter how bullish things feel right now, this bull run will end. And if you don't have a plan, you'll give back all your gains in the next bear market. The best way to protect yourself is to have a disciplined strategy. First, stick to your investment plan. If you had a portfolio strategy before the market pumped, don't abandon it just because prices are rising. Second, set profit-taking targets in advance. Decide ahead of time at what price levels you will take profits and stick to it. A good strategy is scaling out in stages. Sell small portions at key milestones rather than trying to time the exact top. Third, don't let hype control your decisions. If you're thinking about buying an altcoin, just ask yourself, would I still buy this if it weren't already up 200%? If the answer is no, you're probably chasing hype. Another key strategy is reducing risk exposure as the cycle matures. Early in a bull run, it makes sense to take on more risk and invest in altcoins with high upside. But as we get later into the cycle, it's smart to rotate profits into safer assets like Bitcoin, Ethereum, or even stablecoins. One of the best examples of this was in 2017. Smart investors took profits from high-flying altcoins and moved their capital into Bitcoin before the bear market started. The people who didn't got stuck holding worthless coins that never recovered. And finally, don't underestimate the power of sitting on the sidelines. Not every trade has to be made. Sometimes the smartest move is doing nothing, especially when the market is overheated and people are acting irrationally. So what's the takeaway? Well, bull markets create massive opportunities, but they also create a psychological trap. If you don't stay disciplined, you'll get caught in the euphoria, make emotional decisions, and end up losing money when the cycle turns. Now remember, the best investors aren't the ones who chase the highest gains. They're the ones who stay rational when everyone else is losing their minds. Now I want to hear from you. What psychological traps do you think are the most dangerous in bull markets? Have you ever made any of these mistakes in previous cycles? Drop your thoughts in the comments. And if you want to learn more about how to navigate the crypto market without making costly mistakes, check out learningcrypto.com. It's the best place to get real, practical crypto education. Thanks for watching, and I'll see you in the next video.